Robert.
Oh, what's shaking AC?
Well, not much. I am happy to be done a whole bunch of travel in the past few months, couple of months. And so back at home and just trying to catch my breath and dig out of the mountain of emails and get reconnected with all the regular meetings and things that happen. But other than that, things are good. How about you?
Just rocking, rolling. I have an incredible craving for some sashimi right now, so I think I might go eat some raw fish after we're done. Yum.
Okay. All right. So why don't you tell me, we haven't really caught up a lot about this lately. How are things going when it comes to bringing new franchisees into the Control V family? What roadblocks are you hitting, or what's kind of going on there?
Yeah, well, that's an interesting question because, different franchisors and different systems hit different roadblocks, right? Some of them have a problem with the top of the funnel, getting in new leads. Some of them have a problem with the middle or bottom of funnel, like closing them. Some of them have issues with opening them, real estate, all that sort of stuff. I think one of the biggest roadblock that we face, and I think a lot of franchisors are facing this right now, is new franchisees being able to get financing because of the state of the interest rates and the cost of debt. In fact, we've got some franchisees in our system that are wanting to open additional multi-unit locations that are just sitting there and saying, let me just wait on these interest rates for a second. So I find that that's kind of what I hear the most, and probably what I'm experiencing the most at the moment.
Yeah, and I think that brings up a good point. I think that there's just that continued uncertainty right now that's going on where people are afraid to commit. If they knew, okay, these are the interest rates, this is what they're going to stay for the next 5 years or something, if they had a little bit of a crystal ball, maybe they would take the chance, not the chance, but they would accept the high rates. But knowing that, oh, what if they go down right after I lock in at, 11% or something like that? What happens, right? So, and then are you finding like, are there people that some people it's that they can't get the financing, and then there's people that just aren't comfortable with accepting the higher rates?
Yeah, definitely. I mean, the thing is, for people who can't get the financing, I mean, I guess that's kind of understandable, right? Like if you've already got debt, like a car loan, a credit card loan, or a mortgage, right? The banks are going to look at how much of your income is used to service that debt. And there's a certain threshold beyond which they won't loan you anymore, right? So if interest rates go up and you're on a variable rate mortgage, your monthly payment is much higher now, and that you don't have the space to take out more loans, right? Even if you present a bank with a business plan saying this is how much profit I'm going to be making and I could apply that towards the debt, well, a lot of banks are like, all right, that's a dream, let's talk about what happens if it doesn't work, right? But then there's people who will say, I don't want to do that. Like I'm expecting interest rates to drop. I'm just going to wait it out. So, the cost of debt isn't as high for me. Right. And I think there's like, this is kind of the roulette wheel that everyone is facing these days, at least Canada and the United States. Both countries have drastically different balance sheets. Right. But the huge amount of interest that we're paying as a result of this inflation is because of huge amounts of spending in the last, call it 4 to 5 years, inclusive of COVID, supports and things like that. Like that money was basically printed, and as well as money that, our countries send overseas. So the question is, what happens next? Well, I mean, recently the market's been on a tear upwards, especially the Nasdaq, and this has mainly been driven by good earnings reports from tech companies. So a lot of people are feeling very positive about this, but Jerome Powell, all the economic releases, etc., they've halted the increase in interest rates, at least at time of recording this. But the main reason why they halted it was because there was an increased number in unemployment. So they don't want to damage it even
Mm-hmm.
more, right? So, I mean, in my opinion, if things continue the way they are, ceteris paribus, it seems like we may have hit a peak and there will be a decline going forward over the next year or two. However, that being said, that is ceteris paribus. Now, we all know the chaos that is happening around the world politically, chaos, and that all costs money. And so if our country's involvement in this chaos starts to get more expensive, we need to print that money. And if that money goes to different companies, sure, I mean, like, those companies are more fruitful, but that money causes increased inflation, which affects your interest rates. So anyone who listening to this, don't take my thoughts on the fact that we've peaked out, because there's no way I can forecast what's going to happen here on an international basis.
Okay, I feel really bad laughing because there's a lot of very obvious seriousness to the conversation, but I'm laughing about you that, like, you just went on an economics tangent there that I wasn't expecting. Like,
Well,
it's
listen,
not.
my
I
degree is
forgot.
economics. That's what I
I know it
studied,
is.
like,
Yeah,
not
that's
business
your
or
degree.
accounting or anything. It's economic. And believe it or not, actually, about half of the degree time is spent on theory and the other half is spent on practice. And in economics, the vast majority of practice is coding. Like, you're coding statistical software and finding variances and confidence intervals, and it's called econometrics. It's not what you expect when you apply to go to university.
Yeah, but you did it, and anyway. That was yeah, definitely. Speaking of expectations,
Yeah.
that was not what I expected to happen in the last 5 minutes to go down that path. But I'm not going to comment on all of that. I don't think it's really. I'm equipped to comment on that to the extent that you are. So I'm going to leave that. But I did want to just then say, like, people that are struggling with getting franchisees to have the ability or the confidence to sign on, my recommendation is, well, then to look at, if you can't bring more franchisees on now, this is maybe a good time to stop and really take a good hard look at how you're helping your current franchisees. Like, if you're looking for growth, and I guess this might be a little bit self-serving here, but at AC Inc., that's what we're so focused on is anyway, regardless, like, always thinking about, yeah, there's more franchises out there to be gained, but what about the hidden profitability, we call it, if you could help your franchisees make more money so they're happier and you're making more royalties, and then ultimately, when potentially things do change with regards to interest rates and things, those franchisees will be in a better position to either buy another unit or be your amazing ambassadors and validators.
Yeah. You know what?
You're like, for people that aren't watching right now, I wish they could see, like, you're like, I can see you want to say something, but I'm like, yeah, I gave you the 5 minutes. I'm going to take 3 or 2, not even.
Well,
Okay,
it reminds me of what happened during all the COVID lockdowns, where a lot of people just kind of fell into a spiral of depression. And some people were like, this is an opportunity for us to just crush it. Let's do stuff, right? And I mean, that's the path we took at Control V. We were 100% locked down, but we started revamping marketing plans. We started reassessing our different VTO and traction stuff, etc. And actually, I just came out of a meeting this morning. By the way, disclaimer, this is not a financial performance representation. Please, nobody sue me.
Oh my gosh. Okay, be careful.
But we just found that, one of our franchisees just did nearly a 20% year-over-year return. Like, on an investment, like, if you were putting that into a mutual fund or a government GIC or whatever, like, you're dominating it. And I like to say it's because our team buckled down during the difficult times to make things work. So right now, if you can't grow by bringing in more franchisees, let's get the current ones performing outstandingly.
Yeah. Okay. So it sounds like you're on board with that.
Yeah.
That's so what are give me 1 or 2 examples then of things that you are doing to buckle down. When you say buckle down,
oh my gosh, it is like by a million times differential is putting more effort into support. Like, anything and everything we can help our franchisees with. That's what it's got to be, right? When you're thinking about growth or profit first or whatever, you're thinking about, how is your franchise company going to make profit? Well, you make it from franchisees. I put aside like the franchise fees and corporate locations and all that sort of stuff. You make it for franchisees. You're a team. You got to work together. It's like,
yeah. We've already talked about this before, but you also just have to be careful. You don't do things for them, you do it with them and help them. That's another whole rant, which we've done before, but we could do again sometime.
Sure, I dig it.
But for now,
let's wrap it up.
Okay.
Right. 3, 2, 1. Go be awesome.